Hello everyone, welcome back to my YouTube channel. In today's video, I will talk about Warren Buffett's company, Berkshire Hathaway, lost $50 billion in the first quarter, and he sold every bit of his 4 airline stocks. What is he really telling us? So in today's video, I will give you my thoughts about this issue, and then feel free to leave your comment in the comment section. I like to hear about your thoughts. There's no right or wrong answer. Feel free to write all your thoughts. Please like and comment, subscribe to this channel, hit that notification bell. That's the best way to support my channel in this difficult pandemic time. Without any further ado, let's get started. Today is May the 4th. Time of this recording is 11:49 a.m. Berkshire Hathaway sold its entire stakes in Delta Airlines, Southwest Airlines, American Airlines, and then United Airlines. Warren Buffett said he did not sell them because of declining in the share prices. He sold it because he realized he just made a big mistake investing in those airlines. He also thinks even after the pandemic is contained, the airline business will still have very difficult future. He predicts that in the future 3 to 4 years from now, people will not fly as many passenger miles as they did last year, which is 2019. Airline business is already a tough business even in the best times. Now we have pandemic. It's even harder to invest in those companies. Warren Buffett has a famous saying that be greedy when others are fearful. Be fearful when others are greedy. But now, when everybody is fearful about airline business, Warren Buffett bailed out. He sold without any doubt. He selling low after buying high. Exactly, he did what investors are not supposed to do. And then he would rather take this lump sum loss and move on than ride out the storm. So what is he telling us? Let's first look at the airline stocks performing today. Delta Airline, American Airline, Southwest Airline, and United Airline. They almost have very identical chart patterns so far. From 9:30, it had a huge drop for every 4 stocks. It's like somebody is short selling. People are scared, either short selling or people just dumping out of stock because of this Saturday Warren Buffett's meeting. And then after the short selling, when it's reached to RSI below the 20 line, which is extremely oversold line, people start to buy back the stocks, or some short sellers are forced buying back their short selling stocks, and then it triggered the real people buying, and then until the high around 946, and then somebody start to sell again. Not a huge short sell, but still sell, and then it goes like a little consolidation period, and then people start to buy a little bit back again. Shortly after, it dropped again. Either people short selling or people just scared. It could be a squeeze like that, right? Short squeeze the top and people sell again. Could be another short selling behavior. Right now, all 4 stocks are at consolidation period of time. They are going sideways. So nothing really exciting, although you can see small area going up and down, but still on the very undecisive sideways going. So this Saturday, Warren Buffett held a meeting from 4 p.m. until 9 p.m., disclosed his company's Q1 earnings report. The company lost the revenue $61.3 billion versus $63 billion estimate. The net income loss was $49.7 billion versus only $6.33 billion estimate. So it's a huge loss. Earnings per share lost $20.44 per share versus only $2.58 per share. That's a huge loss. So the net asset value is at $372 billion versus the $359 billion estimated. In the last quarter, Berkshire Hathaway posted a net loss of $49.7 billion, almost $50 billion. It is the biggest ever quarterly loss, reflected the $55 billion in investment loss. Compared to a year ago, they had a $15.5 billion gain. Also, 2019 first quarter, the net earnings was $21.6 billion gain versus now the $50 billion loss. Berkshire Hathaway has some essential business like the railway business, utility business, insurance business. They are all deemed essential. However, Warren Buffett said the revenue also slowed considerably in April. Also, some companies like a retail company and some manufacturing company and some service group are severely impacted, including his See's candy business, which is majority closed. So they suffered a huge loss. So what's all behind that? What's all those loss telling us? And his investment in airline movement telling us? So here's my 2 cents. I have about 7 thoughts I like to share with you. First, investing is risky, especially stock market. You never know. Stock market is the riskiest business you ever can invest in, especially during the recession. Even the best investors in the world, Warren Buffett, can lose huge money like that, and so can we. So when you invest in stock market, only invest in those money you think you can lose. If you cannot, if the money you invest in the stock market or the money that you need to spend for the next 6 months, please do not take out your money from emergency fund or from your family use or from your educational fund or from your retirement fund to take out those kind of money to invest. Do not, because we see from Warren Buffett and his company, it is very risky business to get into. Second, do not hesitate to cut loss. Even Warren Buffett can cut into his flesh to lose $55 billion in the investment. So can we. When we see some of the investment doesn't work, we have to set the limit loss. We have to cut the loss and move on. Because when Warren Buffett sees the future 3-4 years, airline business will not recover, he cut his loss and move on. So if we see some of the industry we invested in that has not have the future in the 5 years or 10 years, doesn't have the future for turn back to the previous level, we have to cut loss and move on as well. Number 3, stock market has very high liquidity. Even Warren Buffett has 10% of stakes in all these 4 airlines. He still can get out of there as quickly as he did. Number 4, do not follow any other people's advice or footstep. Don't invest because Warren Buffett invested. If you followed his footstep, invest heavily in airlines or in the bank stocks, he get out before you got out. He can recoup his money so quickly because he has other business. But we as individual investors, we don't have that kind of luxury. So we cannot follow any other people's advice. We have to do our own research. We have to invest upon our own conscience and then research results to invest in the companies that can last. Number 5, do not be a hero in this stock market environment. Even for those stocks with deep discount and then deep valued stocks, don't do it, because even Warren Buffett did not see anything that is attractive. He's supposed to deploy all his $128 billion in the first quarter to buy more stocks, but he said, I don't see anything attractive. He did buy little bit here and there, but he did not buy the whole stake of a company or took over a company like before he did. So we have to be very careful holding on to our cash. Cash is the king in this market. Number 6, many industries have changed due to the coronavirus, and then will change fundamentally moving on in the future 5 or 10 years. The new norm will never be the same as the old norm we had in the past. So we have to really, really be careful. And number 7, do not go all in. I just use Warren Buffett's example, right? He put in 10% stake. Maybe small change for him, but still quite a big. So if we as individual investors, if you have 50,000 to invest, do not go all in the stock market. You have to diversify it. For example, you can put 10,000 in the stock market, 10,000 in the real estate, 10,000 in bond or some other investment opportunities. Do not go all in because you need money to bail yourself out. And then I think in this stock market environment, dollar cost averaging is still very much alive. You really don't have to buy down as the stock market just slide like that. You have to really be patient, wait for the stock market to turn around, then you get in. Like right now, you see all these 4 airline stocks, they're going down so much. You don't have to buy in because people are short selling. Don't buy in yet until it's turned around. Look at RSI. It's hitting low, but it's not all the way low yet. Even if you do a day trading today, wait until the proper time to get in. Be patient. Wait for the MACD to turn around and then to cross that red line again before you get in. And then wait for RSI, hit a 20, and even go lower than 20 line, and then you put in the money, buy on the uptrend or long the stock. So that's my 2 cents. Feel free to leave your comment down below to share your thoughts. I will never be inclusive in this kind of summary, but I welcome everybody to leave their thoughts, and I like to see it. Thank you. If you like today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.